Really red day today. When's the pain gonna end? We did have that big day. Was it last week or 2 weeks ago when the market went up like 7%, the biggest gain in one point gain, the biggest point gain in one single day. Let's see. Okay. So any records today? It's always interesting seeing the biggest when we see like what's today? Today's the 16th. Like the biggest decline ever, and it's happening now. So the largest daily percent gains. So on the 4/9, it was almost 8% gain, which was almost 3,000 points. So that's by far the biggest point gain in a single day, 29.62. Before that, it was 21.12. Let's see. So point declines. Today's the 16th. The 10th 1,000-point decline. Nothing today. So nothing this week. So what's going on? Why is it so red? I'm a little worried about Meta. There's the big antitrust fiasco. Antitrust means a company has too much power. They don't want any company to have a monopoly. So anytime a company gets too big, it happened with Apple, happened with Microsoft, the government tries to split that company apart. They did it with AT&T a long time ago. It's hard to even look at your portfolio on days like this. Let's see the stocks that had the biggest increase today. Treasure Global, 83%, 6 million market cap. Then you have iCAD. Hertz went up 56% today. A lot of these are pretty small companies that we haven't heard of. Yeah, I don't think. Anna, that's 1.1 billion market cap. Never heard of that. New Fortress Energy went up 11%. MP Materials went up 10%. Newsmax, Venture Global. Okay, a lot of unknown small companies. Let's see about. There's gonna be a lot of companies that had that lost today. Para Therapeutics went down 62%, 76 million market cap. Not familiar. Let's see if there's any bigger names. Diginex, Arrowhead, Webull. Does anybody trade stocks on Webull? That went down 11% today. Interactive Brokers, another trading platform, that went down 9% today. That is 67 billion market cap. Why are the trading platforms going down? HIMS, I took a hit. I did a video on Robinhood, another trading platform, another broker. Advanced Micro, 7% today. Yikes. So why did Robinhood go down? I mean, I know why the market went down. There's a lot of, you have tariffs, you have the Meta antitrust thing. There's still a lot of concern that it's going to cost Apple twice as much money to make an iPhone. Shares of Robinhood fell 8.7% amid fresh concerns about tariffs. The pullback followed comments from President Trump clarifying the scope of his administration's 25% tariffs on Venezuela. That's interesting. So Robinhood, which you wouldn't think is too affected by tariffs. But why did Robinhood go down so much? Webull went public this year, a SPAC. It was a SPAC, right? They contacted me, Webull, asking me if I would like promote their platform when I do videos, and I said, you know, I'm with E-Trade, so I'm probably not going to change. And they're like, don't worry about it. Just you don't have to switch brokers. We'll give you a free share just for doing this. I know it was a free share, but I just told them, nah, I'm okay. I mean, what do they give me, a $20 share? I mean, it's not like life changing. Let's see Webull on. I've used it before. Yeah, I'm sure it's a good platform. I'm sure it works fine. It's kind of like a commodity. They all do the same thing. You get free trades if you're trading stock. I didn't realize how recent it was. So yeah, it was a SPAC because it was $10 for several months. That's how you know if a stock is a SPAC, when it's a flat $10 for a long period of time. Because a SPAC starts at 10 and people could buy into the SPAC without even knowing what company they're going to acquire. So the SPAC is a publicly traded entity. It's a shell company, and the purpose of a SPAC is to go out into the private market and look for a company that they can acquire. And once they acquire that private company, then they become publicly traded. So it's a good way to circumvent the IPO process, because it's expensive to IPO. It takes time, a lot of regulatory hurdles. This is just a way to do it fast. CME, I could be wrong, but I think Interactive Brokers went down too. They're all going down. They all went down a lot, the trading platforms. I understand why things are going down, but why that particular market, or whatever you want to call it, that specialized industry? Why do they all go down? I mean, I don't see the connection between tariffs and them. I mean, tariffs affect everybody. I get that, but when you make a product, like Apple makes products, or any manufacturer that makes products, especially ones that import from China, they're really affected by tariffs. But most companies are just indirectly affected by tariffs. There's no competition for exchange data for options. But that's pretty interesting that so Simply Wall Street has them at 39, pretty much where they're trading at. No analyst projections. This is Simply Wall Street, in case you were curious. It looks like they're debt-free, Webull. if you are looking for a good entry point into the market, when the market goes down, that should be more of a reason for you to invest. Looks like they don't have all the information. That's a good ticker symbol, bull. Are you a bull or a bear? 1,100 employees, relatively small. Before you invest in a company, I think you should just on a higher level basis just understand what they do. And websites like Wikipedia do a really good job, kind of like cutting through all like the noise and just giving you the watered down version of pretty much what they do and some other high level information. It just gives you a clearer picture. So then when you start doing more due diligence, things may make more sense. Let's see. Webull provides electronic trading. It's just 9 years old. It's really new. I didn't realize it was so new. I would have thought it would be a little older, like 15 years. So in 2016, good time to start your business because you want to get market share before, I guess, the COVID crash, and it was still in a pretty aggressive growth, the market. In 2017, Webull established you want to get your kind of like platform and foundation all set. So so it was founded by a Chinese holding company, a former employee of Chinese technology company Alibaba and Xiaomi. So the CEO hired Anthony Denier. Oh, the founder. He hired Anthony Denier to become the CEO. And the two mapped out their strategy on napkins at a Mexican restaurant in New York City. Investopedia is really good too. Investopedia is better, but if you want to learn about a company, Investopedia doesn't have usually doesn't have information on companies. Maybe really big companies like Apple. But if you want to learn about like topics, anything in finance, yeah, I think Investopedia is a lot better. But just to like search about a company and understand what the company does in like high level, Wikipedia. The company received SEC approval to launch a robo-advisor on its platform. 11 million users. So they're into crypto. They're kind of like Robinhood, just on a smaller scale. So controversies. Webull has received controversy owing to its ties to Chinese companies. In 2023, they were fined $3 million over complaints, as well as its failure to conduct due diligence when allowing users to trade options. Because when you want to trade options, it's pretty much just like a checklist. They ask you questions and they don't verify anything. And I think that's fine. I mean, if you're going to lie how much money you make, or if you're going to lie about your knowledge of options, then you're going to get screwed. I mean, they can't really kind of babysit everybody. It's your money and it's your risk. So currently has 20 million users. So still pretty small, 20 million, but and they have exposure into a lot of countries, UK, Canada, Mexico, because each state in the United States, you have to get like approval to trade in that state. Each country, you have to get approval. So anybody like Webull? Any Meta, yeah, I mean Meta is going to probably go down. A lot of people are probably went down a lot today. Not that much, 3.7%. Wow, it was 750. That's pretty high. So it's down like 20% from the peak. I remember when I bought it in 2021 at like 315, I think, because it was 20 it was like 10 or so 10-15% off its all-time high. So I felt like, okay, this is a good entry point. And then it took me a long time, like over a year, to finally get back to where I bought in. And at one point I was down almost 70% at the worst point, but it all came back and then some. So obviously once it broke through 700, I was up like 150% because I bought in at, I think 330 maybe. But even with a pullback, a 20% pullback, I'm still up. That's the thing. I had to wait a year to get back to my cost basis. But now, even when there's a pullback, it's very unlikely it's going to go below my entry point. You just got to ride the ups and downs. I bought in a few times. I don't know if I track all my. I should write it in my phone so I could track. I did. So in 2017, I got in at 152, which was nice. And then 339 is when I bought in the second time, which wasn't a great time, but I mean it was off like 15% from the high. I did buy in more, not that many shares though. In April 2022, I bought in at 224 because it was down like what 50% from its, maybe not 50%, maybe like 35 or 40% from its high. And then it went down to below 90, but I didn't buy any more because I had so much in the game already. And hindsight's 2020. Of course, it looks obvious now. Oh, I should have sold all my other stocks and just bought Meta when it fell below 90. It's easy to say, but I already had a lot of skin in the game. So I could see it coming down to like 400 maybe. So it could be but you don't know. So I mean, you can always hold out. It's kind of like when it went down from like 350 to 300. So 300 seemed like a great entry point. Then it goes 250, 200, 150, 100. So at what point do you buy in? Because say you didn't buy in at 90, you're like, okay, you keep listening to other people, it's gonna go to 50. And then before you know it, you missed your opportunity. And you don't want to buy, like when it goes from like 90 and then like a month later it's at 150, you don't want to buy in at 150 because you missed that bottom. So you wait longer, it just never comes back. Yeah, Zuckerberg tried to I think he offered like 700 million to settle, but the government wants like 19 billion, I think. It's like if you run a really good business, then you get penalized. You can't do really well. Like they would never the government would never go after a company with like a 1 billion market cap. The amount of time and money, it just wouldn't be worth it. So they go after the companies with a trillion market cap because they know even in the worst case scenario, like, okay, here it is. In March, he offered 450 million to the Federal Trade Commission, which was really well below the 30 billion they were asking for. He eventually increased it to 1 billion. But the government came down from 30 billion to 18 billion. It's just robbery. It's like he's not doing anything illegal. He's just running such a good business that everybody wants to use their platform. And he admitted, because they were concerned they were losing market share. So that's why he bought Instagram. And he even said, they had a better camera than we did. Do they mention it here? And that's why we bought it. And it was one of the greatest acquisitions. It was like $1 billion. It's probably worth 300 billion right now. And I don't know if it would have been as big if he didn't buy it. If it was just regular Instagram, it probably would have been a big company, but he grew it so much more because he has so many. He already has like a billion users at that point. So it's just easy to kind of like advertise when you already have. It's kind of like if you have a business that has like 10,000 customers throughout the year, people come into your business, right? And if you sell a new product, it's just that much easier to sell because you already have the people in your store buying your other product. So if you test a new product, it's a million times easier than like a new business that tries to sell that exact same product, because no one's going to that new business already when it first opened. It takes time. So Meta acquired Instagram for 1 billion in 2012 and WhatsApp for 19 billion. I didn't know they spent that much on WhatsApp. The FTC reviewed and approved the purchases, but now wants a judge to force Meta to divest both of them. So they want to split up Meta into 3 companies: Facebook, Instagram, WhatsApp, 3 separate companies. So if you own Meta stock, you will get and say they did that, say they broke it up into 3 companies, you will get shares in those 3 companies. Like they may like say Meta is, just say it's 500 a share when they break them up into 3 companies. So it might be 250, 150, 100, the 3 companies. So let's say you have 1 share of Meta at 500. If they break up the companies, you'll keep that 1 share, but now it's called Facebook. You'll get 1 share of WhatsApp, 1 share of Instagram. You started buying Google, Meta, and Microsoft. Is that what MS is? Microsoft? Yeah, I mean, great companies. And sometimes I try to invest in like smaller companies, not really penny stocks, but like companies with like under 10 billion market cap. And it's just a gamble. A lot of times I'll just end up losing a lot of money, or I never really make much. I spend years and years and years on it. Yeah, once in a while, I get a nice hit, but it's not like I'm going to put my life savings into it. I'll put like a few thousand into it. So even if it like goes up 5x, I turn 3,000 to 15,000, which is great. But all the other times I invest in these risky companies, my 3,000 goes to like 1,000, or my 3,000 is still 3,000 5 years later. But with these bigger companies, it just seems like a safer play, and they're growing. It's not like the olden days when you have 100 billion market cap. It takes a decade to hit 200 billion. Companies now are like 1 trillion. Next year, the 2 trillion. I mean, the scale of growth is there. And it's because the world is so much more efficient and so much more involved. It used to be the US was the GDP of the US was like half the world GDP. I'm just making that up, but it was a pretty big chunk. Now you just have so many countries that oh shit. Hello? Did I just turn off the microphone? Can you still hear me? Unfortunately, I don't have the capital to purchase individually, so I'm averaging in QQQ. Yeah, let me know if I think I might have turned the microphone off, because it's really kind of like finicky. Can you guys hear me? Okay, good. I think when I make videos, if this plug gets loose, I have to like reset my computer. Yeah, QQQ. If you don't have, even if you have the funds, you might be better off. I mean, I think if I just never touched a stock and just only put into S&P 500 everything, I think I might. I'm not sure but I think I could be beating myself. Like I could have outperformed my the way I invested. It's not as much fun, and I won't learn anything, or I won't learn much. But I think if we all just stuck to the S&P 500 and only put our money in that, and never sold unless we needed money. A lot of times you panic sell. The market goes down 10%, then next month it goes down another 20%, and you start selling everything because you get scared. I think a lot of people, even a lot of like people who are technically, and I'm pretty confident if you just bought the S&P 500, you'd be beating a majority of those people, like over 90%. Yeah, QQQ. So it's back to where it was a year and a half ago. Oh no, a year ago. So May 2024, it was at 440, and then I got to 540. So it got up to 400 in November 2021. That was kind of like the peak of the COVID rush, the post-COVID run. It was at the end of 2021. There was just such a huge run up. And then when stocks get too high, there's a sell-off, people taking their gains. So from December 2021 to July 2023, so about a year and a half, it took a year and a half to get back to where it was. And then from mid 2023 to February 2025, there was another huge rush. And now it's coming down again. and how much further can it come down. You'll get a different answer from, if you ask 50 people, you get a different answer. Some people are, when you talk to people who don't really know about trading, they say you just have to sell everything because everything's gonna go to zero, and because of the tariffs. But we know that doesn't make sense. We're not gonna. It's not like everything's gonna shut down and we're all gonna be like the Great Depression. It's still a pretty profitable economy, and there's always going to be hiccups. And the only time the market could go up a lot or down a lot in a fast time frame is just the news. It's never fundamentals. The only time it was fundamentals was during the dot-com crash and the Great Recession. Lots of companies, especially during the Great Recession, because the dot-com crash, there was a lot of stocks that were overbought, but they were crappy companies. It wasn't like these were great companies that people were investing in. They were just like, kind of like, just because it had .com after the name, people thought it was a good investment. But the Great Recession, there was a lot of like strong companies started reporting pretty big losses because the subprime crisis, and it had a trickle down effect. Yeah, Pfizer is a good. I was thinking about Pfizer too. I'll be right back. Okay. Yeah, Pfizer. It's come down so much more than other stocks because it's been coming down for a couple of years now. Seems like a really good time to get in because we'll be looking back 2-3 years from now saying, "Oh, it's so obvious. We should have bought Pfizer." It was 60. Now it's 22. So it's down like 65% from the peak, which is a really amazing discount. So it was trading in the low 20s 28 years ago in 1997. I mean, it did get up to 50 in 99. I mean, it does pay a dividend, so it's not like you would have been out money. How to know if it's a value trap? Yeah, I know that. I think that too. Like, it just seems too good to be true. Simply Wall Street at 71. I mean, you really don't know. Just because, what's their yield now? 8%. Just because a company paid a dividend in the past, and just because their revenue was X in the past, doesn't mean they're going to do that in the future. I mean, they've been around since like 1849. 1849. So they have a pretty long history of coming up with new drugs and vaccines. And they did get over 100 billion of revenue in 22 and 23 because of the 2 COVID vaccines, Paxlovid and so it's really that pipeline. I mean, that's what you're banking on with a company like this. Like, do they have enough drugs in their pipeline to get back to these levels? Or even, they don't even have to get to 100 billion. If they could just get to, like, right now they're 60 billion. If they could just grow to like 80 billion, the stock probably will go up a lot. Because when they had 50 billion of revenue, the stock was twice as high it is now. Because from 2015 to 2020, they pretty much averaged around 50 billion of revenue. So 2015 to 2020. That's so hard to find. Okay. Okay, so 2015, they were $35 a share. In 2020, so they're around $35 a share. From 2015 to 2020. So right now their revenue is about 10% higher than it was from 2015 to 2020. And they were trading at $35 a share. So why are they below 35? They should be about $40 a share because their revenue is higher than it was in this time frame. It's really about the future. Investors don't think they're going to be generating as much revenue in the future. They think they're going to come down to like 40 billion. So if you're going to put money into like a penny stock, or not even a penny stock, say a company with like 5 billion market cap, if they were never profitable in the past, it's riskier, I'm saying, than a company that proved it. They were profitable in the past. They had strong revenue for a long time. So it's a little, it's safer to put money into a stock like this than to a stock that really hasn't proven anything. But it's just playing the odds, right? There's no guarantees. I guess that's why you don't want to put all your eggs in one basket. But, and I keep thinking that like I should, it's hard for me to buy things because it's not like I have a ton of cash sitting around. Usually my cash is tied up into stocks or my house. I'm not going to refinance my house to buy stock. My wife would never let me do that. But I may sell some stock to pick up Pfizer. I've been thinking about that for a while. Well, for like a month or two. But then when it hit 20, it just seems way too good to be true. because I'm sure people bought in when it hit, like when it fell below 30. I'm sure there was a lot of buyers. And then you can see when it hit 25 for the first time, it fell below 25. There was definitely some buying activity because it did come up a little bit, not that much, but it's just been trading sideways after it did come up from November. So for 4 months, if you did pick it up at 25, for 4 months, you were like between a gain of 5% and a gain of 12%. So you're just hoping for the big breakout. And then it comes down to 20. So you're like, oh God, now I'm down 20%. BP will be purchased by well, who's shopping around for BP? Is someone looking to buy? I mean, every company is an acquisition target except like the Mag 7, because nobody can afford them. But that's really the only way to grow in certain industries. Like you can't really innovate a commodity. You can't like you if you extract oil or gold or silver, you can't really do much else besides trying to find more locations to extract commodity or acquire. And it takes a long time to find oil. It takes a lot of money to pull it, so it's just easier to acquire another company. So what's the they're integrated? Is that the industry they're in? Oil and gas integrated? The oil and gas integrated. So pretty much oil and gas integrated. It's a small industry. There's probably only like 10 companies in that industry. So there's only 3 companies that could acquire them. Total Energies, that's a French oil and gas company. Yeah, Total Energies. And then Chevron and Exxon. So I don't think Total Energies, because it's not even twice the size. So you'd be looking at Exxon or Chevron. Would those 2 companies acquire BP? Those are really the only 2 candidates. It's almost 7% dividend. It did hit 11% during COVID. But the only way a dividend gets this high is because the stock price came down pretty quickly. So the stock must be down. Yeah, just in the past couple of weeks, or even the beginning of the year, it was nearly 40 a year ago. And then just the last 2 weeks, it came down. So they're probably paying a normal dividend, like 4.5%, 5%. But then when the stock comes down, So it's a $1.92. So it's 5.5%, just the yield, just a month ago. And then when the stock comes down, it's down to 28, shoots the yield up to 7. It's not sustainable. Companies don't usually pay a 7% on a long-term basis. Either the stock will go up, which will bring the yield down, or they'll cut their dividend. Which I don't know, have they done that before? Have they cut their dividend? Yeah, it looks like they did in 2020 because the yield was over 10%. They cut it. So there's probably going to be a dividend pullback, more likely, unless there's a lot of buying activity. And I don't see that happening. I don't see a reason. But this is a time when stocks are down. That's the time when you should buy a company or acquire a company. So Buffett has the cash to buy companies, so he can get a great deal. And Berkshire in 2 years might be double because he's gonna pick up some really, really big discounts. He's gonna, and he could buy some companies in full. He has the capital. He could afford it wouldn't even hurt his bankroll if he bought the whole company for 70 billion. Because what does he have? 350 billion of cash? Yeah. So besides Exxon and Chevron, the only other company that could afford would probably be Berkshire. Or maybe there might be other companies, like other private equity firms or hedge funds that have the capital. But I don't know. I don't know many like private equity firms that would buy a oil and gas company. Buffett is into that. Buffett likes commodities, and he likes like railroads and utilities. He understands them, so that's why he likes them. And they provide a return. Because when you buy a stock that doesn't pay a dividend, you never get a return unless you sell the stock. So I think he likes the dividend. But that's an interesting question, is BP. I mean, has that been a... So Shell, okay, oil giant BP is seen as a prime takeover target. I don't think that. Jerry Seinfeld? I don't think that. Someone just asked. The hell? Yeah, Richard. Yeah, Richard asked, "Do you think BP will be acquired?" So, oil giant BP, which holds its annual meeting on Thursday, has recently sought to resolve something of an identity crisis by launching a fundamental reset. Britain's Shell and U.S. oil giants Exxon have been touted as... So exactly, those are only two companies that really... Exxon and Chevron. Like I said, Total Energies, I don't think it's big enough. So those are only two companies that could really afford it, and that it makes sense. I mean, Microsoft and Meta can afford it, but they're not going to acquire an oil company. That doesn't make sense. But of the companies that can afford it, they definitely are the only two candidates. I wouldn't take anything off the table. You know, oil and gas is facing an existential crisis. Okay. So I'm glad to have these streams because I wouldn't have, unless I read this article, and it probably wouldn't have caught my eye. But yeah, BP. But these types of industries like railroads, commodities, you really have to acquire to grow. You can't grow organically. Like it'll take you 50 years to grow organically to double your market share. You know, like Nvidia organically grew their market share a ton, but you can't do that with an industry that's been around centuries. Britain's energy giant, which holds annual meetings, seeking to rebuild investor confidence. BP pledged to slash spending and boost annual expenses on its core business. BP's green strategy U-turn follows a protracted period of underperformance relative to its peers, with its depressed share price reigniting speculation of a tie-up with domestic rival Shell. Shell. How come I didn't see Shell on here? Why is it down here? That doesn't make sense. Shell is 190 billion market cap. I don't know why this chart has Shell at 0. Something's wrong. No, it makes sense. Shell declined to comment on the speculation. I would conceptualize the question of, will Shell bid for BP? So Shell is another. So there's 3 companies. For some reason, Shell is 0 market cap on this list, which I don't understand, but just sometimes websites just don't have, there's like a bug in the system or something like that. Yeah, Total Energies has the same revenue as BP. Yeah, Exxon and Chevron are the only 2 that could afford it. Yeah. So Exxon paid $60 billion for Pioneer Natural Resources, while Chevron seeks to acquire Hess for $53 billion. It's hard to acquire when you get this big, unless you're acquiring a small company like for like $2 billion. But when you acquire these big companies, like a $60 billion, it just takes time to get SEC approval because they don't want someone to have a possible monopoly. In the mining space, market speculation kicked into overdrive. Between Rio Tinto and Glencore, both companies declined to comment. Speculation about a potential merger between Shell and BP. Meanwhile, is far from new. Perhaps more importantly, BP would conflict with Shell's business. For Shell, Morningstar's Good said that any pursuit of BP would likely be an attempt to merge with two British peers as opposed to an outright acquisition. The thing is, when you generally so Exxon is 440 million, BP is 70. 140 billion, 70 billion. I don't know how much, but I'd say Exxon announced they would acquire BP for 100 billion. So right away, BP would go up to like 98 billion or 99 billion, because there's a chance it doesn't work out. So they don't go to 100 billion. But so once an acquisition is announced, usually the price, it goes up a lot. So the company that's getting acquired, if you own stock in BP, you get a really nice return as soon as they announce the acquisition. Then it could take a year to actually go through. But Exxon, usually the acquiring company, it goes down. So it might go down to like 420 billion. That's generally how it is, because in order to acquire a company, you usually need to take on debt. So the acquiring company goes down. So if you own shares in Exxon, you'd probably lose a little money. Then when the acquisition goes through, and if they were able to integrate the company together over time, it would grow a lot. Like what is it? Like when Meta acquired Instagram, it's, initially, like I said, it might go down a little, although it was a small acquisition, 1 billion, and they were worth probably a couple $100 billion at a time. But then over X number of years, they integrate the companies together, and then the stock ends up going up. In this case, it went up a lot, like it tripled or quadrupled from the acquisition. That's probably not going to happen, but maybe a year after the acquisition, Exxon's up to like 550 billion, and maybe 2 years later. That's the kind of idea when you acquire a company. Seeking Alpha article: Trump revokes licenses for BP shale gas projects in Venezuelan waters. What was that about Venezuela? Were there tariffs? Okay. Trump is levying a 25% tariff on all goods from any country that imports Venezuelan oil, whether directly from Venezuela or indirectly through third parties. The tariffs will lapse 1 year after country ceases importing Venezuelan oil, or sooner officials deem appropriate. So he's kind of penalizing Venezuela. Does anybody know why? Is there a reason he? Because besides, the main reason for tariffs is revenue for the country that's imposing the tariff. So all these tariffs is going to result in a lot of revenue for the U.S. government. It also kind of, I guess, protects jobs in the U.S. because it makes it more expensive to buy from other countries, and it makes it more appealing to make things in your country. So those are like the two main things for tariffs: revenue for the government and protect jobs and protect industries. But the third main thing is that it kind of it helps you put leverage onto another country or penalize or pick on another country. Because when you impose a tariff on a country, you're kind of like, I think of a tariff as being a bully. You kind of have to, you're picking on another country, and which doesn't seem fair. Trump has consistently criticized Venezuelan President Nicolas Maduro, labeling his government as illegitimate due to alleged electoral fraud. Yeah, stuff like that. Penalizing the companies for not drilling in USA. It doesn't seem fair. I write notes. Let me see some of the notes I wrote. Tariffs raise prices, slow economic growth, cut profits, increase unemployment, and increase global tension. I wrote this quote by Milton Friedman. He's a brilliant economist. Like he was talking about monopolies. He goes, the best anti-monopoly is not government intervention, which is what pretty much the only anti-monopoly is, government intervention. It's free global trade, removal of taxes and tariffs. And it's true, because a tariff, it's kind of like you're taxing a country. So it's like targeting a country. But when there's like a regular tax, like income tax, or when you buy things, there's taxes. Every state has their own tax rate. Taxes are kind of equal. It's not really picking on anyone. Everybody pays the same taxes if you live in the same state. And then there's income tax, which everybody pays the same level. If you make $50,000, if you make $50,000 and your cousin in Iowa makes $50,000, you're paying the same income tax. You're at the same bracket. So like income taxes, it's very, even though I don't think it's fair, I don't think government should have to tax us so much, but at least it's even. Everybody's on an even scale. With tariffs, it's kind of like you're penalizing one country, so it encourages people to buy from other countries. If you make tariffs so high in one country, then it almost makes it it doesn't make sense anymore to buy from that country. So you have to go to another country, or of course, make it in your own country. So that's kind of like one of the big negatives of tariffs. It just doesn't make what they pay in taxes. So if I wanted to make a product and you wanted to make a product, we both have the same hurdles, the same difficulties. We both know our taxes and things like that. But tariffs, it puts it helps other countries and hurts other countries. So it just doesn't seem fair. That's one of my biggest. Like, I don't think tariffs are bad. If it was like the same, if every country charged a 10% tariff. So it doesn't matter who you're importing from. You can import from France or Germany or China. It's a 10% tariff that the government collects. That would be fair. But when you have like China is 150% tariff, and then Vietnam is 80%, and then Laos is, it just doesn't seem fair. But that's capitalism at its finest, right? It's just not fair. So but we elected Trump, so we have to live with his decisions. Protecting United States national security. Yesterday, Trump signed an executive order imposing tariffs on countries that import Venezuelan oil. So not only if if you're an American company and you import Venezuelan oil, you have to pay a tariff. Not only is he doing that, but he's saying if you're a Canadian company and you import Venezuelan oil, then we're going to penalize you for doing that. So he's levying a 25% tariff on all goods from any country that imports Venezuelan oil. So that's kind of like being a really, really bad bully. Like, that's going too far. It's kind of like, say there's a guy has an ice cream store, right? And you went into the store with your daughter, and he made a weird comment, and it made your daughter kind of cry. And you're like, we're not going back there, which is fine. But then if you start telling people and like making things up, like, don't go to him, he says inappropriate things to kids. It's like you're going a little too far by trying to like convince other people. That's kind of like what he's doing. The tariffs will lapse after 1 year. If tariffs are imposed on China, they will also apply to Hong Kong and Macau to prevent transshipment and evasion. These tariffs aim to sever the financial lifelines of Maduro's corrupt regime and curb its destabilizing influence across the Western Hemisphere. There's always going to be corruption, always going to be problems, and if you try to fix things, people or companies will try to circumvent the process. We just need free trade. We need to cut away the barriers, get rid of, like Milton Friedman says, taxes and tariffs, and then whoever makes the best product should win, not whoever makes the best product from a particular country will win. Congress may decide to take back tariff control. I think there's a decent chance this tariff thing will get pushed to the side, because the government, the last thing they want to do is kill the global economy. And if the stock market goes down enough, it's gonna scare a lot of people, and especially people with a lot of money, who have hundreds of billions of dollars online. Their money's important. So Venezuela's endemic corruption and mismanagement under Maduro have crushed its people and triggered a regional humanitarian and public health crisis. Millions of Venezuelans have fled. See, we don't know what's going on in Venezuela. I'm sure people would claim how terrible it is. I'm sure it is. I'm sure it's bad. I know inflation is crazy. I mean, inflation was like extreme, like ridiculous. It's almost 200%. When we were like at 7% inflation, we felt like the world was going to end. Remember, it was like 2-3% for decades, and then it went to like 5, 6, 7%, and then everybody's going crazy. Could you imagine like 180 to 200%? That's like 200% is like tripling if everything triples in price. Venezuela's high inflation are due to the total effect of relying too heavily on imports for basic goods, depending on oil. It's mainly the government. The only way you can get, like it happened in Germany in World War II, and it happened in South Africa recently. It's just a bad government, a shady government, not because the government is like a business. Like Bill Gates is really good at running a business. So was Steve Jobs running a business. But the government, even parts of the government, it's just like running a business. You have expenses, revenue, and if you're really bad at running a business, your business really can't go bankrupt. The U.S. government I mean, it could default, I guess, but it's always going to be around. So it's a business that will always be there, even if you screw up the business. It's like Venezuela screwed up their business. Their economy got so screwed up, but it's not like if Apple does a really bad job at running their business, they go bankrupt and they go away, and then somebody takes their business, which would be huge, Apple going bankrupt, but it wouldn't end the world. But when a government, especially U.S. government, hey David, what's up? Isn't most inflation just monetary inflation? Right. Well, yeah. It's I mean, it's a lot. It's a lot of different things, but yeah. But the what's that term? Like it's directly monetary, but indirectly, how does it get there? It could be because the government took on too much debt and couldn't pay the debt, or rising unemployment, or they, like in Germany in World War II, or a war, and so that's it's like a cause and effect. The cause is a lot of different things, but the effect is just too much money, and if it's trying to fix the problem. So when there's too much money in circulation, they just have to keep exacerbating it. Yeah, unintended consequences, exactly. But it's kind of like a Ponzi scheme, if that makes sense. It's kind of like Ponzi schemes don't really work in the long run, because most Ponzi schemes fall apart because you constantly need new money to pay the old money. So if you have an investor that gives you $100 and you guarantee a 20% return, you just need $120. So if this investor tells their friends, and their friends tell their friends, and then you suddenly have millions of dollars coming in, and you could constantly pay the previous investments, but as soon as the money dries up, Bernie Madoff did a great job. He was able to keep it going for like 30 years. But at some point, there's not enough money in the world to maintain the Ponzi scheme. So it's kind of like the government, in a sense. They just need to keep, which makes things worse. So the more money that comes into the Ponzi scheme, the worse it becomes. But it kind of hides the fact that it's a Ponzi scheme. So Madoff may have started with $100, and then he just needed $120 to maintain the scheme because he only had one investor. And then if he had like 10 investors and he had $10,000, he just needs like $15,000, and it just keeps growing. Like every year it has to grow by 50%. So this is a pretty rudimentary way to explain it, but why did you keep doing that? So in year one, he has 10,000. By year two, 15. And by year 8, 170,000, which doesn't seem like a lot of money, right? And by year 12, he needs 860,000, because you need a 50% more than prior year to pay your old investors. And then by year 18, you need 10 million. So it's starting to get big, but still, 10 million is not that much money, especially when some people are worth $1 billion. but you can see how it, by year 27, 380 million, which is still doable, but it's starting to get up there. But by year 35, he needs nearly 10 billion. And if any point in these 35 years we hit like a recession or a time when people are tightening their belts and you don't get new investors, then it falls apart. But eventually, it's just not sustainable. But yeah, it's like the USA. But the thing is, as much as debt we have as a country, if you look at it, we're still our GDP is still really high. Like our debt is not growing faster than our GDP. It's kind of like if this was your salary. This is your annual salary, and this is how much debt you have. Like your debt is going up 50% a year. But as long as it's lower than your salary, which it is every year, it just seems aggressive. And now you have debts in a million, but your salary is going up just as fast. And that's what's happening with us. Where our GDP is it's not like our debt is outpacing our GDP. Uh, so here's the GDP. Maybe so it's kind of matching. It's so in 2013, GDP was equal to debt. Same thing in 2015, 16. GDP was about 100% of debt. And it has come up. I'm not saying both GDP and debt have come up, but it's not like, so right now debt is 123% of GDP. So debt is higher than GDP. But I'm saying they're both growing a lot. They're both moving. It's not like debt is just it's kind of like this chart. That's what I'm saying. So we're not like in this huge crisis. We've actually improved. It was 126% in 2020. Now it's down to 123%. So we're just kind of like we're keeping up. U.S. was growing nominally at like 5%, and debt was growing at 7%. But it did jump up a lot from COVID. I wish I could get this chart like um Yeah, so they are moving together. Debt is actually outpacing GDP, but not by that much. I'm just saying the way people think about it is they think we have like 50 trillion in debt and like 2 trillion in GDP. Like people, the way people make it sound is like we're all debt, but it's trying to do this chart. How would so this is how I would think about it. Like in year one, we have we have a GDP of 10,000 and debt of 9,000. And then year two, we have GDP of 15,000, debt of 13,650. So debt is actually going up faster than GDP. So like now in year 18, debt 10.5 million, GDP 9.9 million. So debt is moving a little faster, but it's not like out of control as people make it sound. The way people make it sound is like our debt is like 10 times our GDP. But GDP is gross domestic product. It's annual. So if you have like a million in debt and your annual salary is a million, you're doing fine. It's when you have like 10 million of debt and you just can't even pay the interest on it. The thing I could see possibly happening with the tariffs is because demands could always be there. Companies are going to have to continue producing and trying to cut costs. But the U.S. is going to have a lot of like extra money from these tariffs because that's what tariffs are. It's a tax. And the U.S. and China, who import the most stuff in the world, mainly the U.S. They're gonna have a boatload of money, so maybe they can use that money to lower the deficit or something. I don't know. Maybe something good will come of it. I'm pretty hopeful because based on how quick COVID, how quick we recovered from COVID. I mean, the world shut down for a week, literally shut down. Like people weren't even leaving their house. And within a month or two, we rebounded. Then we were at all-time highs. So based off of that, I think any future market crash or recession will rebound quickly. That's just my thought. Well, we have the most debt in the world by far, but you can't look at debt on a nominal term, because if I have a million in debt and you have a million in debt, right? We both have a million in debt, but my salary is 500,000 and your salary is 50,000. I'm doing a lot better than you because you're never going to get out of that debt. If you're only making 50,000 a year and you have a million of debt, and I'm making 500,000 a year and I have a million of debt, like I'm doing okay. After I could even pay off my debt probably in a few years. So you can't look at debt on a nominal basis, but what country GDP to debt ratio? So yeah, that's the way to look at it. So our GDP to debt is 119%, which isn't great. It's the 10th worst. It's much better than some other countries. But that's who we are. We work on leverage. it's like I said, if we both have $1 million of debt, so much, we're so profitable. More than anybody else by far. It just makes it a lot easier, I think, for us to figure things out. We have a lot more to work with, a lot more money to work with than these other countries. Even how much debt is too much? I mean, you can't put a dollar amount, but I guess as an individual, you don't. I mean, you have to figure that out for yourself, I guess. But we're in a lot better shape. It's not like, because the UK is 100% and we're 119%. I wouldn't say the UK is in a better position than us. We're by far the strongest country. But it's interesting seeing Kuwait is only 3%. I guess they don't really need much. They're a self-sustaining country. They can do it all themselves. They don't need help from anybody else. The rest of the world has huge debt. Everyone is in debt trouble. No, I mean, the only people who are in bad shape, I guess the countries, it looks like we're in bad shape, but if we didn't generate so much GDP, I would say so. But anybody over 100% is at a risky stage. Of course, we're fine because our GDP is so high. Same thing with Spain and UK. But I would say like Cabo Verde and Bhutan, they're probably in bad shape because they can't just they don't have enough GDP to work with. So but okay, so yeah, it was an interesting stream, looking at a different point of view. Yeah, Canada has quite a bit as well. So yeah, thanks for joining. I'll see you in the next live stream. Thanks for all your comments, and talk to you later.